Well, hello everyone, and very warm welcome to our webinar called The Mindset of the Business Advisor. Delighted to welcome you today from wherever you're joining us from in the world. My name is Colin Dunn. I'm a director and co-founder here at Panalytics. It's my pleasure to host the webinar today, and today we're honored to be joined by Mike Meilinger. Mike's joining us from Greenville, South Carolina. Good afternoon, Mike. How are you today?
I'm doing wonderful, Colin. I appreciate the opportunity. Thank you.
Terrific. Really, really good to have you here. And I was saying to Mike before we started that the webinars that we do where I interview other accountants, CPAs, tend to be the ones where we say that was really, really valuable. And so I really hope that you'll lean in and listen very carefully to what Mike has to say today to help you think about ways in which you can make that transition from accountant to advisor. And I know you're going to take a lot out of the session today. This session will be interactive. And so at any stage, if you do have questions, please just locate the Q&A box in the Zoom webinar panel. And you'll find a little box like the one that you see on the screen. You can enter your question into that box right there, and we'll be able to respond to those questions in real time. If you're watching a recording of the session, of course, you won't be able to do that, but please enjoy the questions that others submit. And some of you have sent questions beforehand, and we'll do our very best to answer those as we go through the session as well. I mentioned the session is recorded. That means that you'll get an email after the session is complete where you'll be able to listen to the recording again and share that with others and with your team if you choose to do that, and we'd certainly appreciate that if you do that too. So once again, Mike is joining us, and what we'll be hoping to share with you today are some key takeaways, and the style of this webinar will be interview format. And I hope that as we go through it, you'll get some really important takeaways from our session. The first one is all around how accountants can be held back. And Mike will share with us his thoughts on why that is, and the impact of a scarcity mindset in holding us back as accountants from really embracing that role as the trusted business advisor. Secondly, we will strive to give you a real understanding of how you can get very, very focused on your clients and the goals that the clients have, and use that as a key to selling advisory services. Number three, why advisory is much more than just crunching numbers and sending them reports. Fourthly, how starting with high prices is a key to success, but really importantly, I'm putting all of this into context because when I asked Mike to join us for this webinar, times were very different in the world. Now we're in a time where there's a crisis that's happening all around us. And so we will put some context around this by thinking about why your clients need you more than ever during times of economic downturn, and how to approach them and how to continue to help them achieve what they're looking to achieve. And that could be short term right now, but with a view to emerging from this crisis in a strong position, and the important role that you can play as their accountant, as their CPA in that process. So let's get into this, Mike. So if you don't mind, just give us a little history of your firm. So where you are, where you've come from, where the firm is now, and where you're taking this business to.
Well, okay, I'll give you a very brief history. In 1997, I started the firm. I started out of my house basically because I couldn't keep a job. My wife asked if I could make the house payment. So I thought that was a good idea. Within a few years, I had a business of about 125,000 in revenue. I was working literally 100 hours a week, and my marriage almost just destroyed my marriage. I ran into a guy named Kent McCown, who I'm very grateful for because he really taught me how to make money as an accountant. And he talked me into merging the business. I was at such a humbled state and such a bad mindset that I was like, listen, you just hold my stock in escrow and I will become, and after the first busy season, if you still want to keep me as a partner, you can keep me as a partner. You can just write me a check and I'll go get a job. Well, Kent doubled the billing rates of all of my clients. So he took my business from 125 to 250 in 1 second, and not one client left. And that was my introduction to how to increase revenue. So I ended up, me and Ken ended up, he he's a strictly business advisory guy. So he went out on his own business advisory. He's the president of a company right now, and he does a lot of high level consulting stuff. I took the smaller business, and me and the tax manager became partners. I was a majority partner. We took the business at that time from about $170,000, $200,000 of small business revenue to about $700,000 just by great economy and taking every client on. But then we hit the churn, and the churn is where you're growing, but you're losing clients, and you seem to have bad employees and stuff. So about 2006, I sold out to her. I had a non-compete for 5 years, and then I started a litigation practice where I just worked with attorneys, and I did valuations and stuff. And occasionally, I would never touch an individual return, but when a business client came in, I would keep them. I ran into a high-end client that I thought could really benefit from tax planning, convinced him to become a client just about the same time my non-compete ran out. And that's where our accounting role started. And because I was never really marketing for clients, I ended up doing business clients only. And at the same time, a real critical thing that led me to the firm I have today and is instead of signing up with new clients incorporated, which were going to give me 150 clients, me and my wife actually went to their seminar, and I stood up and was like, no, I'm not going forward with this. We went to Strategic Coach, and Strategic Coach taught us, one, that you had to have a vision. Two is that you had to delegate. But three, the most valuable thing I learned was to focus on relationships and multiply opportunity. So Strategic Coach said, hey, don't worry about all these small clients. Focus on your big clients. And even if you spent time with them and didn't charge them, it was a good thing. And that started leading us to the business we have today, which currently we're at right under $2 million in revenue, 11 full-time employees, and approximately 75 customers. So where my plan is, and Colin's helping me with this, is to really double that over the next 3 to 4 years, and to actually get into a role where instead of me doing the value delivery, I have other people to do the value delivery. Our clients we're client agnostic. We work with people who make money. I mean, our tagline is CPA advisor to the 1%. And so we work with people who have a mindset that either they're in the 1% or they want to be in the 1%.
Right. So a couple of things there, Mike. So first of all, the average fee per client is significantly higher than what you would typically see in a CPA firm. So what sort of clients are you working with? You said you're client agnostic there, but just give us a profile of what a typical client might look like.
We have a lot of service-based businesses, so our largest clients are attorney law firms, and then we have some, of course, medical practices, and then a couple guys. Really, we have, if you took our biggest clients, some of them are serial entrepreneurs. Like we have a guy who has probably 6 businesses that we work with. And so if we're big on having a minimum check. So if a client calls us and they want to do work with us, our minimum fee is about $9,000 a year, is that we have to do services of at least $9,000 a year for you to be a client of ours. And if we don't think, and I tell people this, I don't want to just be an expensive accountant. I've got to bring value. And if I look at a business and I don't think that we can justify the fees, I refer them out to other CPA.
So let's say a client comes on at $9,000 a year. What services would you provide for that fee?
Generally, we're going to be doing compliance work, their tax returns, and then what we do is we do a lot of tax planning, because here in the U.S., tax planning is really, really crucial because you can really help people if you meet with them. So we have a process where we'll usually meet with the clients 2 to 3 times a year and help them plan their taxes, and then we'll do the compliance work and deliver it. And since most of our clients are making at least $400,000 to $500,000 a year income, it's easily worth the fee to do some tax planning. And sometimes, if there's some real opportunities that we think would require, like, we'll charge them an upfront fee or stuff like that. So.
Right. So the $9,000 is really the basic fee. You mentioned it, the minimum fee, the tax,
Right.
the compliance, the tax planning, and then on from there as you get to know the client and figure out what they need, right?
Yes, sir. Mm-hmm.
Okay, great. So here's an interesting question. When people say to, because the firm you have now is very different from the firm that you used to have, and when people say to you, Mike, what do you do? Let's imagine you meet someone at a social event and they say to you, what do you do, Mike? How do you answer that question?
Well, so I'm working on this. This is one of the things, but my current answer is we are a transformational accountant. I'm a transformational accountant. I transform the view of a business owner and the view of their business, the view of themselves, the view of their opportunities.
Right. So, and how do people respond when you say that?
It's been pretty positive. I mean, I have new ideas occasionally. So like, the CPA advisor to the 1%, it was interesting. Some people resisted that a little bit, but they liked it a lot. They ended up being clients. So they don't like being, considered a 1%. So.
Yeah, I guess it depends how you frame that, doesn't it? I mean, which end of the 1% is it? That's fascinating though, isn't it? Because it's a lot of this is about language. And how you position yourself can reflect in how the client will relate to you. Do you find that?
Yes, sir. I do believe that the most important thing you can do is just connect to the client. Right. And understand that you're a business owner like they are. So I'm always, no matter how successful a client is, I always feel like I'm on equal ground with them. We'll talk a little about that later, but because, what we do as a CPA is the blessing of being a CPA is that I meet with people all day long who are successful like them. And I get to observe what they do right, what they do wrong, and I can bring a lot of clarity to clients. And most of your successful clients, they're meeting with employees all day long. So when they meet with you, you're the only business owner they get to meet with on a regular basis. And so if you can bring that collective wisdom to them, they know, like I have clients who know that they make a lot more money than I do, right? I mean, which is obvious, right? Because they can compute what we charge them and see,
Right.
But they also recognize the fact that I'm advising a lot of people like them and that we're doing, and we have a lot of wisdom in our firm.
Exactly. And I really share that view. And I found over the years that's one of the biggest issues to get over as an accountant. And you'll be amazed the number of accountants who've said to me, I don't feel as though that I can advise clients because I'm not running a business myself. And well, of course you are, but you're also advising many businesses. So as you rightly say, Mike, you can pick the eyes out of what's working and what's not. That's such an important point. And for those listening today, do make notes as you're going because Mike's going to cover a lot of ground here. So if you can just pick 1 or 2 points and just take them and implement them, you'll get value out of the session today. Mike, let's turn to mindset. So the title of our webinar today is all around the mindset of the business advisor. And one of the things that you've often talked about is that word of mindset. So tell me, how important is that to you? And specifically, what do you mean by mindset?
Well, mindset is the problem, right? Mindset is the problem. Mindset is the solution, right? People need to realize the business you have today was created in your mind. I mean, the thing is, and a lot of the problems you have today were created in your mind. So if we could sort of hack our mindset, right? If we could recognize, I think there's 4 or 5 truths, right, for a CPA to recognize. One is that not all clients are good clients, right? Because, a lot of times we have a hard time letting go of bad clients because we like people. CPAs like me, I love people, right? And I care about them. No matter how bad they treat me, I like them, right? So the second thing is some clients are bad clients. There are actually some clients out there that do not want you to make money, right? They want to really get by, right? You know what I'm saying? Back in the day, I had a client who somehow and did not pay me for 3 years of tax returns. Not all at one time, 3 separate occasions. So the thing is so when people, if you guys want to ask anyone who's ever done something wrong, it's me, right? I mean, everything I've learned is by doing stuff wrong. So this third thing is You will not get rich on individual tax returns unless you're H&R Block. What I mean by that, unless you have a model that completely separates you from individual returns and dealing with those individual tax returns, you're never going to get rich, right? So you've got to make a decision, and we'll talk about that, to move away from doing the individual tax returns. The fourth thing is real powerful is there's a core group of your clients that love you, that care about you, and want more of you. They want more of your time. They want to pay you more. And they think that you can bring value to their business, and they're sitting there wishing that you would call them. And the fifth thing is you have to be religious about delegating everything that does not bring value, right? So those are what I call the 5 truths that most accountants, once you recognize those as truths, then you can start working on changing your mindset, right?
So, Mike, let's dig into that a little bit, and because I can imagine people listening just scribbling down those 5 truths and so on. So let's go back to the top one, and I'll just ask a couple of questions. So, not all clients are good clients is number 1 here. So, is this a case of just going through the client list and categorizing those clients? How do you address that?
Yeah, well, one of the tools we use analytics is the Pareto analysis, right? And I always say a Pareto analysis is an X-ray of your practice. And that's where you just sort of take your revenue, you organize your clients, and you count it up by what relationship brought so much money. And most accountants, a lot of times, they'll look at their Pareto analysis, but they won't do anything about it. They'll look and say, hey, I've got 200 clients that account for 10% of my revenue or 8% of my revenue. And they won't realize that that's probably, you should get rid of those, right? So, so our Pareto analysis is, I want to say there's about 29 clients or 30 clients that are representing about 80% of our revenue, right? And the other one, so even our minimum check, those guys are sort of on the bottom of our Pareto analysis. And we're trying to move them up, right? We feel that there's an opportunity to move them up through planning sessions, through asset protection, and through different things like that. But they're also profitable at that level. But yeah, so not all clients are good clients. The Pareto analysis will tell you that.
Right. So number 2 then, some clients are bad clients. Do you find that even some clients who pay you well can be bad clients?
Yes, and I mean, that's a problem that CPAs have is they'll let their clients treat their staff bad. And if you ever want to get up and to the next level of team, right? One of the limiting beliefs accountants have is I can't find good help. And one of the reasons you can't find good help is because you let people talk bad or treat your staff bad or be rude to your staff. So the first thing is a bad client doesn't treat your team well, right? The second thing about a bad client is they might not pay, well, they might not pay you well, right? That's the easy one,
sure.
Right? So the thing is so those are things about bad clients, yes.
Okay, all right. Number 3 then was you won't get rich off individual returns unless you're H&R Block. Let me ask a different question on this. So we'll have people joining us in maybe small communities today who say, well, yeah, that's easy for you to say, but how do I get rid of some clients because word's going to get around town that I fired some clients? How would you deal with that one?
Well, I mean, I usually refer them to other people, but you're going to lose clients. The secret is to lose them nicely, through price increases and even talking to them, or having just dealing with that. But one thing to do is just not try to replace them neither, because with your individual clients, you're going to have a churn, especially if you're increasing fees. Don't replace them. When you get a business client, look at the revenue of the business client. Everyone's so growth conscious, they want to keep it all. Right? Oh, I want to keep all that individual revenue and this new $20,000 a year business client. No. Get rid of $20,000 worth of individual work. Refer to another CPA. I mean, I was telling Colin, we've referred more clients out than we've taken. And it's interesting because we refer them to one lady who works for a CPA firm. But over the last 3 or 4 years, we've gotten 2 of, not her clients, but 2 of that firm's clients. And they've both been these what we refer to as whales,
Mm.
right? A whale comes in and they have like 20 entities and they have all sorts of work and they're looking for some proactive accounting. And so this was one of the big sales you saw in our sales pipeline, right?
Right.
And it was just compliance work. It was just compliance work. Our compliance work, we priced it about 40% higher than he was paying, and he came over. And the thing is, and it's very profitable work, but the biggest thing what we did is we gave him a 2-hour planning session with that compliance work where we're going to sit and talk to you about planning and everything. And we feel that that will lead us into more of the business advisory work that this guy can afford to pay for, that really wants. Like, he really wants asset protection. He really wants some profit improvement, and he really wants some estate planning. We know that. So anyway.
Yeah. Let me take 4 and 5 together because I'd just like you to rationalize the 2 for us if you can. So number 4 is there's a core group of clients who love you, so you're better off spending time with them. And then number 5 is delegate everything that you can and focus on creating value. So how do you do that? How do you focus on clients but also delegate as much as you can at the same time?
Well, when I say focus on clients, you want to be talking to your clients, right? So it's better, the CPA that's sitting here like this all day, keying returns, that's not a good use of your time, right? The better use of your time is picking up the phone, calling the client, even going out and seeing a client. So that's where, you want to be doing. Me and Kent, when we were working together, we would always say, let's hide in the office because we got too much work to do. If you want to get more work, go out and talk to your clients and you'll come back with work, right? And so and there's a group of these business owners. Our specialty when I tell clients is I'm looking for a business owner, been in business about 7 years. They've got a CPA. The CPA's done a good job. Mm-hmm. They just feel like they need more, and their CPA doesn't have the capacity to spend time with them. So what we're marketing to is the clients who are with someone with 600-700 tax returns, right? And that's neglecting this business client. We're like, hey, did you do any tax planning? Has he talked to you about asset protection? Has he talked about this? And these are things that people are like, no, my CPA's never talked to me about that.
Right.
Or the worst thing is, yeah, they said they were going to get back to me on that, and they never did.
Yeah. Yeah, exactly.
I've done that before too, so I mean.
All right. So for the benefit of those maybe listening on a recording of this and possibly sometime in the future, we are right now around about the start of week 4 of the coronavirus crisis. So, Mike, tell us about how you're working with your clients right now, and I'm thinking specifically around what you said about pick the phone up and talk to clients. So, what are you talking to clients about now, and how are you helping them?
Well, we're talking to them about first of all, what we did for the first time ever is we did some webinars on all the tax changes in the and the first webinar was terrible, but still the clients said it was good. So the second one was much better, the third one was good, and the fourth one was good. So, and clients really appreciated that because they wanted some knowledge. Then the second thing we're doing is, of course, we're talking to them, right? Hey, how are you doing? What are you seeing? What's going on? And then the third thing what we did, and this is where, it comes to giving back, is at no charge, we've been assisting people with getting these loan packages done in the U.S. I mean, if they're a fixed price agreement, we're including it in. If the client's business has been hurt, we're definitely saying, hey, we're doing this as a service to you because you need this. And so it was probably we worked more hours this week than we ever have. I mean, I think we had employees hitting 50, 52 hours a week, and we normally are taxis and everything 40, 41, 42 for most. So, but that was a big week because we had to step up and help our clients, right? And give them some clarity on what to do next.
Right. So you're taking the view that it's more important just to be on the front foot and helping them at this time instead of thinking about, can I actually charge them more money?
Right. Yeah. Especially for we're all of our clients, like you said, they pay us a decent amount of money. And so at that juncture, I'm sure someone who's just doing an individual return might, or there's a transaction account, might need to think differently. We're fortunate in that we have a lot of fixed price agreements, so our revenue is consistent. Yes, our realization, our profit will go down because I pay out overtime. So that will come out of the profits and stuff. But the thing is to me, it was just more important just to sort of step in the gap. And some of our clients will pay us for it. I mean, the thing is,
Sure.
but definitely the ones that their businesses are shut down right now, we're not going to send a bill. If we send a bill, we'll be a zero bill. And we'll say, hey, there's no charge for this.
So this is a classic case of start with high prices, and then you've got some flexibility and some room to work with the clients.
Yes.
Right.
Yes.
Great. Thanks, Mike. So we went through 5 truths there on mindset. You also have 5 steps of mindsets that you talk about. So just explain that to us.
Well, and also this is, like I said, is I give a lot of credit to the mindset people that I follow, like David Bayer is big, and Tony Robbins and Brendan Bouchard. So, but the first thing what we talk to people is, there's this inner conflict that accountants have, right? And the accountant says, if you ever spend time arguing with yourself, you have an inner conflict, right? And a conflict is where we believe something. An inner conflict is where we want something, right? But our belief is different. Like, so for example, we want to work 40 hours a week, but we believe that money's hard to make and you got to work long hours. Or we believe that our clients will still call us on the weekends and stuff like that. Or we want to delegate, but we believe employees always screw stuff up. Or we believe that there's no help. So you've got to identify the inner conflict. And the way to do that, if you're talking to a client or if you're talking to yourself, is kind of just say, hey, what's the problem, right? And so you say, I want to work 40 hours a week, and what's the problem? The problem is I can't find good help, right? Or the problem is I can't afford to pay people. The problem is my clients are too demanding, right? Those are all beliefs, right? So that's the inner conflict. And then the second step, and this I got, it's really powerful, but it's very simple, right? Our beliefs are just decisions. Sometimes, like when I started my business, I grew up poor for the U.S. or the Western world, you know what I'm saying? So I saw my dad working his butt off, and I left college, and my salary was higher than my dad's, right? My first job out of college, right? And he was cheap, and he saved money, and my mom's still living off his retirement. But the thing is so I thought money was really hard to make, and I wanted to wear nice clothes, and I wanted to drive a nice car, and I was like, you know what? I got to work really hard for money, right? Well, there are people out there who don't work that hard for money, right? But I made a decision. So once you can identify that your beliefs are just a decision, right? Then you just need to make a new decision, right? And there's some work that's involved in that, right? And I work on my decisions every day, right? Because you'll find that a lot of the stuff going on in your head is just, well, why do I believe that, right? So the third thing is you really got to be grateful, right? And a lot of people are ungrateful. And we run into a lot with accountants. We're complaining about our clients. If you go to to accountant conference, it's sometimes a bitch session, right? I mean, the thing is we're complaining about employees, we're complaining about this and everything, but really we all have a lot to be thankful for, right? Now, I mean, the thing is thankful for like these free webinars and thankful for all the information. I mean, when we really think about it, but gratitude is one of those things that they've actually proven that when you get in gratitude, your body releases chemicals that heal itself, right? That's why a lot of people are always like, hey, get on gratitude. But gratitude also gives you energy, because when you start making new decisions, you're going to have to do something, right? I can talk to you about mindset all day, but when everything's said and done, there's some work involved, and you're going to need some energy. And the way to get that energy is through gratitude, right? The fourth step is we really got to get clear on what we want. That's why, I mean, most people focus more on what we don't want than what we want, right? We don't want this and we don't want that. But the thing is that's why any business consulting arrangement, like when we do a planning session, what's so powerful is we talk to the thing, where do you want to be, right? Where do you want to be? And let's get clear on that, right? And let's take it over a period of time. But you've got to do the same thing with yourself. I mean, the biggest thing that helps me with the business advisory work is I'm doing all the same work in my company. And we're getting clear on what we actually want and what that looks like. Because most people, when I tell them, hey, get clear, make a new decision, and accountants are bad about this too, and their Colbys and Enneagrams sort of lead to that, but is they always worry about the how, right?
Mm.
And if you worry about the how too much, you'll never even vision what you want. How am I going to do this? Don't worry about that. Get clear on what you want, and then the how will come to you. I mean, there's a great saying, a Buddhist saying that says, when the student is ready, the teacher will show up, right? And so the thing is, we'll talk about this. I sell business advisory stuff all the time without knowing what to do. And then all of a sudden, Colin shows up in my life, right? And I'm like, hey, so the thing is there's a great saying. So don't worry about the how, just focus on getting clear. The fifth thing, and there's actually six, the fifth thing is you've got to ask good questions, right? Most people ask shitty questions. I mean, I'm sorry for the language, probably acceptable in Australia. But the thing is we really have bad questions. We're like, why does this always happen to me? Why does this person always do this? Why do employees always do this? And the thing is you got to ask powerful questions, because your mind is going to give you an answer. If you say, why do I always screw up? Your mind's going to find all the things you screwed up. So let me give you a good example of a powerful question. One question I always ask, before I meet with the client is, why am I grateful for this client? How can I bring value to this client?
Right.
What point of wisdom do I need to bring, right? Who do I need to show up as, right? Because there's some clients, I just got off the phone with one of my advisory clients, and I told him, I said, hey, my role with you is to be the cautious accountant, because you are fearless, right? I mean, he's just tripled down on his marketing door. This is a young business owner. I was like, hey, my job with you is some of my clients, I have to be the aggressive business guy.
Sure. Yeah.
Don't be scared. Go forward, right? So the thing is those are powerful questions. And the sixth thing, and I think this is really powerful, and this is what prevents accountants, is you got to hack fear, right? You got to realize most of us are afraid because we're afraid of failure. And what I've looked at in my life is that there's really no such thing as failure, right? You're just learning, right? I mean, the thing is and when you look at fear, when you do fail, right, and you realize that there's no such thing as failure, it's going to be four things that's going to happen. One is you're going to learn something, right? Like, my first outsourced accounting engagement, I priced it like $500 a month, right? And I think when everything's said and done, we made $10 an hour on it. We had 50 hours on a $500 engagement. And my employee was costing me like $30 an hour.
Right.
You know what I'm saying? And to bear in mind, Colin, the client wasn't even happy. So the thing is, hey, that was a learning. We learned a lot on that engagement, right?
Yeah.
Second thing is a redirection. So you might have been headed down the wrong path, and the experience corrects your course. Like, the Great Recession sort of got me to the point where so it's okay, cool. Someone mute me. I think somehow I connected again or whatever.
You're good. Yeah.
So the thing is when I sold my first accounting practice, the truth be known is I was planning on retiring. I had a few $1 million, and I was a cheapskate, and was very tight with my money, and I was thinking, I'm just going to do some litigation work and everything. Well, I made some really good decisions on investing in like oceanfront real estate, which is a rich, and lost a lot of it. So I had to go back, but that sort of was a redirection, because it led me to the course that I'm at now, where I'm actually helping business owners and doing things and learning from the mistakes I made, right? The third thing is it's a reflection, and that is if you're smart, anytime you have a failure, you'll realize that somehow it's a reflection on you, on your beliefs, on what you're doing and everything. And the fourth is sometimes it's just setting you up for something different, right? I mean, a good example, and I'll be brief on this, is there's this process you go through, a gratitude tree, right? And a gratitude tree is where you look at something and say, well, what had to happen for that to happen? And you just follow it down, right? So you take something in your life that you're very thankful for. Like I have this client, I'll talk about, that's actually, he's my uncompensated outside salesperson. I probably have on the books $400,000 of annual revenue from him. I just recently signed up a client for $54,000 a year, and And it was just because he referred him to me, not because I was a good salesperson, not because of anything like that, just because this guy is so credible, he refers. And I was just thinking, I said, well, how did I meet that guy? And we might not have time for this story, but I met him by selling him an apartment complex during the Great Recession, and he was rich, and I had a bad partner, and it was the worst real estate investment I ever made. And I just had briefly told him I wouldn't sell it to him because he was rich, and I had a poor guy that wanted to sue me. Right? So about 2 weeks into it, he calls me and says, Mike, listen, I've got the problem is my 1031 is more than the sales price. And this was, I was like, hey, I got a simple solution. Do you trust me? And he goes, yeah, I trust you. I said, just up the sales price, I'll pay for the repairs before you buy it, right? And he did that, and we were all happy and stuff. And about 2 months after that, he calls me and he's like, Meilinger, he goes, you screwed me so bad on this deal, on this apartment deal. You are the slickest CPA I've ever met. I need to hire you. And that's how he became a client. But I look back, and the only way I met him, and I'll be brief on this, was I met him because a banker that I met because my marriage almost failed at the lowest point in my life. And I realized that this great personal failure was really brought me to where I met this client who I'm very thankful for. And the truth matters, it's interesting. I was telling him that one time, how grateful I was. And he was like, Mike, you know what? I'm just going to tell you something. I feel exactly the same way about you. And so basically, I was very blessing, but that's what we call the setup, okay?
Perfect. We had a lot of questions in advance here, so let's do some quick fire questions. So here's an interesting one. One of the differences between advisory and compliance is that sometimes you're rejected when you put forward an advisory project. How do you deal with rejection?
Well, one is you've got to have, there's a great saying called SW, 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 right? Some will, some won't. So what? Someone's waiting. And the thing is, I'm the kind of person, I always focus on the positive, but the day we signed that $54,000 client, I had another sales meeting with a long-term client, right? That definitely could use the same services for the same fee. And he said no, or he said he was going to think about it for 2 weeks. And, but the thing is you just got to realize that it's a learning. I take some of those rejections a little harder than I should, but I always remember that it's a learning experience, and you gotta do it. I could have gotten both engagements if I lowered the price, but I'd be working twice as hard and unable to deliver the value.
Right. You mentioned, Mike, you just signed up a new client, $54,000. You've told me you've got clients paying $4,000, $5,000, $11,000 a month. How do you do that? How do you develop the courage to propose fees of that sort of magnitude? And also, how do clients respond when you do that?
Well, the funniest story is we had this one client where I was in a sales group, and just like every other accountant, I was trying to put my best foot forward, and I said, I'm going to charge this guy $3,500 a month, and this guy really needed our help, and I'm thankful because we'd never been able to help him at the fee. And then the sales coach was like, you got to charge this guy at least $15,000 a month, right? And I was like, oh. And of course, I made the commitment. That's why it's good to get in a group of guys and make a commitment. I made the commitment to do the $15,000 a month. I went to type up the engagement letter. I did everything wrong because you're never supposed to just email the client engagement letter. But me and him had talked. I told my idea was not to do the compliance work. We just work together on advisory level. I said, I'll send you an engagement letter. So I sent it for $11,000, right? And this guy is he's an 8 on the Enneagram, a real powerful business owner, makes millions of dollars and stuff. And he called me and he said, Meilinger, I'm signing this engagement letter, but I couldn't push the 15. I did 11. I just could not bring my finger to do the 15, right? And I did 11. He goes, I'm going to pay this. He goes, the second month when you send me this invoice, if I don't feel there's any value, I'm going to send you a picture of me flipping you a bird, right? And so he's been working out with us for 2 years, and we've helped him. But what I learned was this: one, why I can quote a high price is one, when you get employees involved, it takes more than you think to bring value.
Mm.
So the thing is just remember that if you're going to do everything yourself, a lot of people go, oh, $2,500 a month. Well, oh, that's a lot of money. When you start getting employees involved and you're paying benefits and stuff like that, you realize it's better to price high. You know, Kent McCown used to say, you can always go down, you can't go up.
So you need to price high in some cases then. That's interesting. So does it get easier over time, this pricing game?
Definitely gets a lot easier. Definitely. It's like any muscle, right? You know what I'm saying? I think it's important. Dan Sullivan released something called the 4 C's. And I would challenge every accountant to remember this. Commitment, make a commitment, right? Requires courage. It's going to take some courage to do that, right? That will lead to increased capabilities on your part, which will lead to increased confidence. And then you can make another commitment. So even like you said, is if you're struggling doing some advisory work, make a commitment. I don't care if it's $1,500 a month, or make a commitment to do one engagement, get it out there and get it out of your system. If you've done one for $1,500, quote it at 3 and see what happens, right? So the thing is because that will lead to courage, which is the requirement to change. And then you'll develop new capabilities. Like the best thing about this $11,000 a month engagement is our team has developed so much capabilities to deliver services to other clients. I'm actually going to people who refer him to me now and say, listen, because they're open with each other. And I'm telling them, these are my long-term clients. I'm like, listen, I feel bad. I'm doing all this work for this guy, and I've never offered it to you because I think you're so successful that I can't help you. I said, but I'm finding that this guy who you say is super successful has really gotten a lot of value, and he'll tell you that. And by doing that, Colin, we got that planning engagement with the large guy who referred him. I just had an honest conversation. I feel bad I'm not offering you this service. I think you can benefit from it. He's like, you're damn right I can benefit from it. Let's do it. And
right.
So it's good.
So here's an interesting question. How do we position ourselves as consultants when we're positioned already as tax preparers?
Well, I mean, so it counts like you always want to try to position yourself. What I would use is there's a nice little analysis tool called Profit Sense.
Mm-hmm.
And so sometimes it's good with your business clients to sort of break out from behind the desk and go over that analysis with them and talk to them about how they go to the how they look to their peers, what their key performance indicators are and stuff. It's very simple. You can delegate that then. You can do it off the tax return, but you just got to break out of that box, okay? Hopefully you're talking to your clients and giving them advice that they're appreciative of, and you're helping them save money on taxes. If you ever help someone save money in taxes, in the U.S., that creates a lot of credibility, right? Because they're like, oh my gosh, my accountant was doing it wrong, and you did this. And so all of a sudden you've got this credibility to speak wisdom into their lives.
Right. That reminds me of an interesting piece of innovation that one of our members started using with our growth equation. Do you mind if I just show that for a second?
I love the growth equation.
Yeah. So this is really fascinating in that, and some of you will already be using growth equation. I think innovation's key at times like this. So Mike, you were just talking about using Profit Sense there, essentially doing a high-level evaluation of the business, and using growth equation, we can really drill down into some of those key drivers of revenue and profit. Let me show you an example here. So this is a typical business, and it doesn't matter what the economic times are like. I think clients need to understand what's driving revenue and profitability in their business. And so I always take the view that if we can help the client understand where revenue is coming from, then they're in a better situation than they were before I had that conversation. And when we built the growth equation, the idea here was to show the client the potential upside. But what if we can now show the client the potential downside to really focus their mind on what they're staring at, what they're facing here, which might inspire them to take some action. So what I'm showing on the screen here is how do we understand the current state of the business. So we look at revenue from existing customers. Perhaps there are 350 customers paying $7,000 a year each, 10% of whom will churn or leave each year. And then we get some revenue from new customers by acquiring leads, converting some into sales. They pay an average sale value of $7,500 in this case, which gives the business 2.6 million in revenue. We then factor in the costs by looking at cost of goods sold and expenses. So those of you who are using growth equation, you know all of this already, so we can see where the business is now. But what if now we say to the client, let's take a look at what could possibly happen here? Because we're looking here at a good, profitable business, $250,000 in profits coming out of this business. But imagine you have that conversation that Mike's referring to here, and we say to the client, so just imagine what might happen in the next 3 months. What do you think revenue per existing customer might drop to? And maybe they say, oh, yeah, that's a good point. Maybe that's going to come off 10%. Perhaps we're going to lose 30% of customers rather than the normal 10. Maybe our marketing's going to fall flat and our number of leads will drop. Perhaps we'll still convert those leads into new customers, but not at the same sort of price. And we're already feeling a squeeze on price, so cost of goods sold might increase. And well, maybe we can take some cost out of the business and we'll be okay. But will they, is the question. And so if we just run that quick analysis, we can show the clients, in this case, we go from a $260,000 profit to a $133,000 loss. Now, if they've only got $20,000 in the bank, we know right there that the client's got some problems. So, Mike, I just thought I'd show that to demonstrate the point that you're making there about how do we engage the clients with some analysis and get them talking about where do we need to go. Does that make sense?
Oh, yes, sir. I mean, the growth equation is great because it's really, it lets, if you take it on too, I mean, in the good times, I love the fact that it gives that Pareto analysis that says, hey, this is the one thing you should do. Because most business owners are really, they got too many ideas of too many things.
Right.
They got limited resources and limited time. And if you could say, hey, this is where you can focus. We use the growth equation on one of that large client I was talking about, and, you know, very sophisticated individual. I mean, $100 million plus company. And he was really impressed with that, because the thing is we were able to show him that some of the things, that one of his numbers was off track. And we said, hey, if you increase this number, right, you're able, this is where you need to focus. So, you know, no, don't focus on sales, focus on this. And
right.
He's really seen it, and he's actually probably had a jump in profit of about $2 million, you know, just. Wow. So it's been you know, of course it was a great year too. I wish I could take credit for all of it.
Of course. Absolutely. Okay, we've got time for a few more questions. So here's a question from Jan in Sweden. So he said, you know, in times like this, with everything that's happening with the coronavirus and the economic crisis, what do you think the biggest challenges are for accountants or advisors right now?
I think the biggest challenge is going to be assessing the impact of it on your client. I mean, you know, that's going to be, and staying relevant. I mean, because the truth of the matter is, you know, clients have monthly fees they need to pay. And if you're speaking truth to them and you're reaching out to them and trying, you know, the thing is I've been shocked at some of our monthly clients when they go through financial problems. None of them have ever cut our bill. I mean, so I was asking about one of our clients who I know is hit really hard from this. I was like, oh, I wonder if, you know, they paid us or whatever, just try to, and they're like, no, they paid us the first of the month. So, you know, you got to stay relevant, because you can't be overhead. You've got to be that trusted advisor.
Right. So how do we manage our own feelings at this time?
What are you saying?
How as accountants can we manage our own feelings at this time?
Well, I mean, you know, one thing I used to tell all my team was there's never such thing as an accounting emergency, right? But now this is it. This is, you know, where we have to step up. You know, I mean, the thing is don't get me started. I'll go into this whole diatribe of how people are not courage, right? You know, hey, you know, don't worry about getting the coronavirus. Worry about how you can serve. This is the moment that is an accounting emergency, right? I mean, literally it is. I mean, you know, your clients need you more than ever. And, you know, And that's the way I look at it is that, this is an accounting emergency. I'm going to make it. I have no doubt that I'll make it. I think I'm going to grow during this, but I really don't care at this juncture. It's really about some of my clients who, I've got clients with gyms. He's got 5 of these yogas and CrossFits and different things, and they're all shut. I got clients with hotels. They're shut down. What I'm saying? I got dentists that are, doing 30% of the production and stuff. So, I mean, it's gonna, you've got to manage your business, right? But the thing is if you've got 2 choices in the coronavirus. You can look at your net worth and your financial reserves, and you could say, I'm gonna make it through that way, or you can say, I'm gonna outrun it. I'm gonna actually grow. I'm gonna actually go forward. I'm gonna actually challenge and try to grow during this period of time, and I'm going to outrun it because it's going to end, right? And so the thing is I plan on outrunning it. I could make it through it, I think, but I'm not worried about that. I'm saying I would have to lay off people and different things like that, but that's not my mindset.
What an opportunity. And I strongly believe, Mike, that those accountants who take that view and really step forward and embrace this. And I love the phrase there, this is an accounting emergency, that inspires action. We've got to do something now. And those who do, I feel, will come out in a very strong position here. Let me ask you this question, and I know you'll love the question. How do you counter imposter syndrome?
Well, imposter syndrome, I think we should all be working to the next level of imposter syndrome, right? So the thing is it's natural, right? It's part of the courage thing that I talked about, because you're stepping outside and you're advising the client and you might not know it. But the thing is any of you guys who are familiar with the Enneagram, I'm a 3 on the Enneagram, and that is one of the things is that 3s look at the mirror and they say, who am I? Am I really this guy, right? But your goal should be to work up to the next level. The next level of discomfort, right? Because imposter syndrome is just another word. I'm not comfortable, right? I'm not comfortable being this person that I need to be, but and that also deals, I think, with a limiting belief. One of the limiting beliefs behind imposter syndrome is I don't belong, right? I don't belong here. These guys are better than me, right? And the truth is I'm a Christian. So I have a belief that my new belief, instead of saying I don't belong here, is that God would not put me anywhere I don't belong, right? I'm here for a reason. But I do like, people say imposter syndrome, because I'm like, just get up to the next level of imposter syndrome. If you're worth 2 million, make people think you're worth 5 million. If you're worth 10 million, make people think you're worth 20. And the truth of the matter is all of my clients, I have a mastermind group that I put together one time 4 years ago, that probably the average net worth is 25 million. The average guy in there makes over $2 to $3 million a year. Well, my revenue is going to be 2 million. So you can do the math. I don't make $2 million a year, right? Some people might think that they're not accountants, right? So, but I've gotten very comfortable hanging with those guys and being with them. And now I'm like, they bring their rich friends to this mastermind and they become clients. But I'm definitely, since I've done that mastermind, and I tell those guys this all the time, the guy who's benefits the most is me. Because, when I started it, I think my revenue was like $750, and my earnings have correlated to my revenue. So.
Perfect. Mike, I'm convinced that a lot of the success that you have has come down to the language that you use, and that as an opportunity for those of us who are joining the webinar today. And by the way, if the growth equation is something you want to take a look at in a bit more detail, just type GE into the Q&A box, and we'll give you some more information on that. Here's another opportunity as well that some of you might be interested in. The language of business, it's really, really important, understanding that the language of business is very different from the language of accounting or the language of finance. But how do we deal with that? So one way in which we're helping accountants deal with that is through running a course. And this is a 12-week program. The course syllabus is on business context. So the market, vision, goals, planning, implementation. And against all of this context, that's how we can then phrase advisory projects. So the way in which we run these courses, and there are 11 of them that we can run different topics, it's different learning styles. So some one-on-one, some group activity, some self-study workshops, feedback and field work. You'll be assessed, and at the end of the course, there's certification. So this is a really interesting way of just immersing yourself for a two or three month period, and you can get your team involved as well. This is how it works. We start with orientation. We then customize that for your firm, knowing that all firms are different. We then run some role plays. And so in some cases, we will act as the accountant, you as the client, and then we'll reverse that to give you the opportunity to use some new language that you might have developed in a role play situation. And then we send you out into the field. So go and find a real life client and take those learnings into a sales environment, and at the end, assessment and debrief and certification. So if that's something that you might be interested in, just type the word language into the Q&A box, and we'll send you some more information on that one. Mike, we're coming to the end of our time together. What would be one piece of advice that you would give to the people joining us today as to how they can really take that step and embrace that role as the natural trusted advisor with their clients?
Well, one thing I would like to leave everyone with is, I think most accountants have this negative perception of sales, right? And so, and the reason is, just like right now, I mean, the thing is I can tell you that these classes bring value, and that if you go through this, you'll get more revenue. I've done a lot of them with different organizations too, and you always get more revenue. But selling to your customers is, accountants have this bad perception of selling because they think it's win-loss, right? And it's not. Your client needs more of you. So the thing is, all you're offering, like, I'll give them an example, I'll be brief, but right now, I have a client who I've been hammering on about asset protection for 3 years. He finally listened to me. He paid me money, and I helped him set up some trust. I helped him set up some things. He did about half of what I told him to do. And now, you know, he is so thankful that he did what he did, right? And he's so grateful that I told him, you know what I'm saying? I had to sell him on this estate planning. And it was like, hey, I need you to do this. I'm worried about you. You've got a lot of money. You're a target. These are things. And I was getting paid, you know, yeah, I'm getting paid, right? But he knows I have his best interest at heart. He knows what I'm telling him is true for me. So when you go from that perception, you should never be embarrassed. You should never be afraid. You should always think of what am I trying to accomplish for this client? What am I trying to help this person do? And how will it serve them? How will it be valuable? But selling to me is not selling. It's serving, and it's helping, right? And it's opening your client's eyes to what they need. You know what I'm saying? You need to work on your business. You need to work on this. So I did take the last 2 minutes, sorry.
Mike, thank you. Thank you so much for your wise words. As ever, it's an absolute pleasure working with you. Thank you for sharing with everyone who joined us today. And thank you for everything that you do in your community. And now that community extends to accountants around the world. And I know that everyone who's joined us today will have got terrific value from that. And the key is to implement. So just take some ideas and try something, do something different. Jono is going to run a poll just to get some feedback from you all on this particular webinar. But so please answer that and join us again next time. We're running a couple of webinars a month through this difficult time. And I'd just like to say on behalf of all of us at Panalytics, to all of you who've joined us today, thank you for taking the time out of your busy schedules. Stay safe, be healthy, focus on your clients, do great things, and embrace this opportunity. As Mike, you said, this is an accounting emergency. What an opportunity for the accounting profession. Thank you again, sir. It's been my pleasure. And we'll talk soon.
Thank you, Gal. I appreciate you.
Okay. Bye, everyone. Bye-bye. Bye-bye.